The markets in Nigeria now, the NSE All Share Index extended its recent gains to a third day today, rising about 1% to 37,266 points. The bourse was lifted by gains across several sectors. Consumer stocks are starting the quarter very positively, but is this run sustainable? Let's find out from Esili Eigbe, an analyst at Stanbic IBTC. Esili, thank you very much for joining us. So like I mentioned, a pretty good start to the quarter. We've seen 3 days of gains. Of course, if you look at today, we've seen quite a few consumer good companies also doing very well. The brewers, some of the fast food consumer good companies as well doing pretty well. But for you, which stocks are likely to outperform in that space? And many people say that the valuations of many in that space are already very stretched, but is there any opportunity left in the consumer goods space for you?
Thank you very much, Wole. It's a pleasure to be on the program. With respect to your question, I think that there's still a lot of prospects for names like UACN and flour mills. Just coming to reasons why we like those two names. UACN in particular, there's a number of, I think, very strong catalysts for the company this year. A number of corporate actions that should be announced during the course of the year. There's a divestment currently ongoing on GM Motors auto segment of the business, and as you're quite aware, the key restructuring of the business basically remains. They just recently announced JV on the restaurant business with famous brands. So I think catalysts like that are pretty strong. And then with respect to earnings growth, we do expect them to release much more superior numbers relative to other consumer peers. With respect to flour mills, I think we've gone into a pretty low cycle as far as wheat prices are concerned. That's a very major input cost for the business as far as total business is concerned. And so as wheat prices come off substantially, that should translate into much stronger quarterly returns, which I think the market should respond to positively.
All right, so deals done by UAC would be a catalyst, and of course for flour mills, you said a decline in prices of some of their major raw materials. But how do you assess the consumer in Nigeria right now? It's been a pretty tough year. Last year, I think a lot of people say was even tougher, but how do you gauge the consumer in Nigeria right now in terms of his purchasing power? A lot of people say there's an increasing sophistication in the market, but then when you look at the broader consumer space, we're looking at the masses, if you like, how do you rate them right now?
Yeah, look, I still think that there's still some strength there, and what we tend to look at is the potential, and it's the reason why a lot of the consumer companies you talked about, invested in Nigeria. We really haven't seen a substantial decline in capex. They remain relatively strong, even in contrast to the last few years. So I still believe that the Nigerian consumer offers a lot. You're right in the sense that growth in spending has slowed somewhat, but we're not seeing a decline in trend in the sense that the consumer is not spending less. However, because of the increase in fuel prices last year and the resulting impact of the crisis in the north, confidence has dwindled substantially, and it's basically led to the slowdown in spending that we've seen. Clearly, we've seen more discretionary goods affected by this trend, but we're still seeing very, very strong demand as far as staple food is concerned. So you're still seeing names like flour mills, Honeywell post very strong top-line numbers driven primarily by volumes. You're seeing the same trend as well in the names like Nestle, Unilever, but it'll be a lot stronger if the consumer were more robust. But I think there's a silver lining beneath that as well. It's basically forced a number of the consumer companies to innovate on route to market and also products. So you're seeing quite a number of discussions with distributors, key distributors, with respect to enhancing their secondary distribution. And with respect to products, you're seeing, Guinness, for example, launched about 4 new brands in the last 12 months. So I think that that's a pretty strong trend, and will obviously lead to sustained earnings growth over the medium to long term.
All right, so good earnings growth over the medium to long term. But let's talk a bit about these valuations, Esili. Guinness, Nigerian breweries, Unilever, Nestle, trading well over 20 times earnings. I think some are even well over 30 times. And the interesting thing, Esili, for me, is that they are staying at those levels. So how do you justify that, in your view?
Well, like I said, the outlook for growth is still pretty strong. I guess it all boils down to how much value you see today. A lot of investors tend to take a long-term view on stocks, and I think that's what we're seeing here. As you see, most of the companies you described, trading at this kind of valuations are mainly multinationals. So these companies are mainly held by quite a number of local funds, but also internationals would see, these companies as relatively safer compared to some of the, indigenous, locally run businesses. So I think that we can justify those valuations on those grounds. But I think in the event of, a tapering off, by the Fed, come, in a few months' time,
right.
I think the stocks are more likely to decline than probably move up, and that's why we tend to continue pushing on the likes of UACN, flour mills, which still look a lot cheaper from a valuation perspective.
Right, so stocks are a bit vulnerable in the consumer space. I think that's what I hear you saying. Thank you very much for joining us, Esili Eigbe from Stanbic IBTC.